Hi there, and you're watching Dúchascopy TV. I'm Dur McDermott. I have Edward Karr in the studio with me today, and he is the CEO of RAMPartners. So welcome today.
Thank you for having me.
So Edward, what is RAMPartners all about, and what do you specialize in?
RAMPartners is a Swiss financial company based in Geneva, and we really specialize in investment banking and capital raising. So our partners have financial backgrounds. Most of us come out of the institutional brokerage industry, and we've worked over the years with many different companies, actually helping them raise capital, taking companies public, both in the United States, Canada, and over in Europe.
And Edward, you're also a part of the Global Alliance Partnership GAP. Now, what is this and what is your role?
Yeah, that's right. We're a proud member of the Global Alliance Partnership. So GAP is a partnership of a number of different financial services firms around the world. And GAP is a really unique organization. We're mostly mid-tier firms, very entrepreneurial, and the partnership really aids all the other partners involved. So we have a number of different partners, for instance, one in Dubai, another one in Hong Kong. We have a partner back in New York, in the United States, one in Thailand, and we see a lot of different unique deal flow from the partnership, and we can also contribute the deals and the investment banking opportunities that we're involved with. So I'm actually a principal of GAP, one of the shareholders of the organization, and we have a number of different conferences that we get together each year. We just had our last one in Shanghai, China, so hosted by our partners Quam, and it's a wonderful organization for our business.
Now, Edward, let's have a look at the markets and what's going on, as there is a lot happening. Now, back in 2004, you were named one of the top traders of the year by Futures magazine. So, with this experience, tell us what you're seeing and what are the issues in the markets at the moment.
Well, a lot has happened since 2004. I almost feel old, since that time. But as you say, the markets are dynamic, the markets are always changing, and there is a lot happening out there. A couple of things probably just to touch on, highlights today. Number one is the U.S. government shutdown. So U.S. government out of business. Unfortunately, they have no budget. They sent everyone home. The senators and congressmen are still getting paid. I don't know why that's happening, but that's a big issue out there. The bigger issue in the short term is going to be the debt ceiling. Is the United States actually going to default on their debt? What's going to happen? Will this fight between the Republicans and the Democrats and the president actually have resolution? And we're coming very close to that. Other big news out today, Janet Yellen is going to be the next chairman of the Federal Reserve, so she's being nominated. So you look at her coming in, she has pretty much of a dovish overtone. She's definitely going to follow along the policies of Ben Bernanke. What does that mean, all of this stuff that's going on? Volatility's been increasing recently. We've seen the VIX index spike up to 20. We're not back to sort of crisis conditions. Don't forget 2008, 2009 lows. The VIX was already up to 80, but we are increasing. So the market's getting more volatile. The markets as well, US, North American equity markets, European equity markets, were trading up near all-time highs. I mean, the economies have been turning around, but really it's global central banks that are the key. They've been pushing the liquidity into the system. They've been on the bid. They've been pumping up all the stocks, the currencies, the bonds out there, and everyone's watching, is the Federal Reserve going to taper at some time this year? Probably at some point they're going to have to. That is already discounted a little bit in the market. So I think the market is really fairly valued right now. If the United States goes into an economic slowdown because of the shutdown, GDP could even go negative. That would certainly have negative implications for both the stock market and the bond market. The dollar's been selling off a little bit recently, so if you view that as an opportunity, it could be a good time to actually start positioning, taking some positions in the US dollar. Myself personally, I think the markets are going to really do well. I think the United States will get through the crisis. It always does. I don't think it's a reason to panic, and I'd probably be a buyer on any pullbacks.
Edward, thank you very much for coming in and sharing your views.
Thanks for having me.
And thank you for tuning in to Dúchascopy TV today. Do stay tuned, as we have plenty more coming up on the show, so see you soon.